2012, determining there was still more room for the stock price to increase. Since that analysis, the stock price has, in fact, increased significantly from $57.39 to $73.82. We now want to reassess the analysis to see where the stock price can go from here. This time, we will walk you through a complete analysis of Wal-Mart to determine the potential value of the stock. It is important to note this book was written in October of 2012, so all analyses are based on that date. This technical analysis is based on three methods. 1. Comparable company analysis. 2. Discounted cash flow analysis. 3. Precedent transaction analysis. Each of these three methods views Wal-Mart from three very different technical perspectives. Individually, these methods could present major flaws. However, it is the common belief that looking at all of these methods together will help us understand the technical drivers supporting Wal-Mart's current stock price. Using Wal-Mart as the example, we will build and construct all three of the listed analyses and all the supporting analyses exactly as a Wall Street analyst would. We will then have the ability to interpret from the analysis if Wal-Mart is undervalued, overvalued, or appropriately valued. If the company is determined to be undervalued, that may suggest the stock price is lower than expected. We can potentially invest in the business and hope the stock price in time will increase. If the company is determined to be overvalued, that may suggest the stock price is higher than expected. In this case, it may not make sense to invest in the business, as the stock price in time could potentially decrease. We are assuming, in these cases, there has been no unusual or unpredictable activity or announcements in Wal-Mart's business or in the stock market. Such activity or announcements would affect the stock price above and beyond what the technical analysis predicts. It is important to note that the modeling methodology presented in this book is just one view. The analysis of Wal-Mart and its results do not directly reflect my belief, but rather a possible conclusion for instructional purposes only, based on limiting the most extreme of variables. There are other possibilities and paths I have chosen not to include in this book, but could have also been sufficient. Many ideas presented here are debatable, and I welcome the debate. The point is to understand the methods and, further, the concepts behind the methods to properly equip you with the tools to drive your own analyses. How this book is structured. This book is divided into two parts. 1. Financial statements and projections. 2. Valuation. In Part 1, we will build a complete financial model of Wal-Mart. We will analyze the company's historical performance and step through techniques to make accurate projections of the business's future performance. The goal of this section is not only to understand how to build a model of Wal-Mart, but also to extract the modeling techniques used by analysts and to apply those techniques to any investment. Once we have a good understanding of Wal-Mart's past and future performance, Part 2 will help us interpret the company's financials into a valuation analysis using the methods mentioned previously. You may skip directly to Part 2 if your needs do not require building a complete financial model. It is important to note it is not 100% necessary to have a full-scale model in order to conduct a valuation analysis, but it is recommended. Valuation techniques are based on a summary of the company's performance. In this case, to be complete, we will use the model of the company built in Part 1 to extract the necessary summary information and to conduct the valuation analysis. However, you could technically use summary information as well. The book is designed to have you build your own model on Wal-Mart step by step. The companion template can be found on the companion website associated with this book and is titled NYSF-Walmart-template.xls. To access the site, go to www.wiley.com/go/Pignataro. Password investment. Part 1. Financial Statements and Projections. Financial modeling is the fundamental building block of analysis.